Hello guys, welcome to the Trading Parrot. With the Trump pump, the CME gap, the breakout over the weekend, things are getting really interesting. I want to give you my take on that, all the relevant information to understand whether we can trust this pump. Guys, if you like this type of content, make sure that you're subscribed to the channel notification bell so you get notified every time I put out one of these videos. And if you feel like supporting the channel, watch this video until the very end. And do not go anywhere without leaving a comment down below. That's really helping the channel to continue growing. And guys, yesterday I made this live stream crypto map, which together with the previous altcoin video I made last week, pretty much every coin from my selection is doing really well. And I think if we get the ETF approval, there should be a lot of extra upside. And if you want to trade altcoins using an amazing bot platform, have a look at my video as well from Saturday. This is just a very simple example of why Genium platform is so powerful. Even if you ignore the results as a bot trader tool, it's just incredible the kind of things that you can do nowadays with bots. If you're not into bot trading, I also put out on Saturday this video on how to become a master of liquidation levels using the tool Trading Different. Have a look at both not just packed with information, but also with amazing discounts in the description. Before we go into the daily, the 4-hour time frame, and today we're going to cover the weekly as well, some things are changing that you just cannot miss. We're also going to look into where is the liquidity live. And if you want to stay up to date with liquidity changes, signals, and all of that, make sure that you're following me on Twitter. My handle is Trading Parrot. You can see here on Trading Different that we have liquidity at 51, the one that I was fishing. And I told you that I might not get lucky to be able to buy that low. Let's not count victory or anything yet, because the next big liquidity is located over 67K. Yes, there is some green areas around here, and I think the incentive to go this high has been pretty much due to what happened with the Trump pump over the weekend. So whether we can really get to that 67K and trigger the return of the bull market or not, we're going to have to look into the rest of the charts. This morning, I also published that we are approaching the CPR levels. We're going to look into this. I'll give you my take on what to expect once we get to those pivots. And if something changes during the day, I'll publish it on Twitter. The daily seems to be so far today, Monday, going against my thesis, which was a rejection on this level. But don't go so fast, because this part of the candle that we are right above the resistance is only with the price action of Monday on the market open. This could well continue going higher, or it could also revert back below this level, turning it into, again, resistance, and then going back into support around here. Finance Lot is a great account on Twitter. In this case, we are comparing the dot-com bubble against where we are right now. For many of you that experienced the dot-com bubble, like myself, that was quite a massive correction led by Cisco taking a 5.5% of the GDP in the US. And you can see how Nvidia is even doubling that portion of GDP that is taken from the market, which means that we should expect that if eventually the bubble pops, there should be a very significant reaction in the market. I was mentioning over the weekend that it's very interesting to see such humble amounts of realized losses during these corrections. And I think that has to do with the fact that during this bull market, the drawdowns are also very insignificant. Retail is not here, so when there is panic, that is relative to way less retail in the market. In this market in particular, when the realized losses reach minus 12% and the drawdown is around the 20%, we tend to see a reversal to the upside. And over the weekend, I made a huge deal about the CME gap. CME gap has a very low rate of failure, meaning that most of the time when we create a gap over the weekend, this gets filled sooner or later. The gap, as I mentioned, starts from 57.8, and in this case, on the open, we were at 60.9. That was at midnight. Since then, we made it to 63.8. So we are going to discuss whether we could see a move here for a retest, possibly taking partially the gap at around these levels that were resistance at 59.5, or if we are actually gonna fill the full CME gap. You can see that we are approaching the same order block that moved us 10K to the downside, and after the breakout, we made a very impulsive move towards the CPR monthly of July. Right now, the selling pressure is coming in potentially to form either a bull flag around here and then a second attempt to get into the pivots, or potentially a comeback for a retest. We could say that if the retest is very significant, for example, if we come here to the beginning of the broadening wedge and even we enter slightly inside of this, creating lots of panic, that could be enough to consume the full CME gap. If you zoom out, that might still be perceived by traders as something bullish. It looks good to me. On the 4-hour RSI, I have corrected the line. I used to have it like this, but it got really messy after so many retests and then a complete fake out. We made it to 79 on the 4-hour RSI, so I'm gonna put this here respecting the new pivot and look out for a potential break of this to understand the momentum on the 4-hour. Right now, the 4-hour is very overextended and reaching critical levels, so that bull flag or that retest has high likelihood of coming next. On the daily, we have conquered lots of things. The trend line, it's recovered. We closed the day. We broke our resistance coming from the RSI. We have the point of control at 67. I'm going to show you how much liquidity we have at 67. Pretty interesting level at the moment. Today's candle, as long as it closes above the previous candle, that will be an amazing victory for the bulls. If we see a retracement below the RSI level here at 60.5 and closing below, that would be a massive rejection. So hopefully we don't go back below the trend line. But if we go below the trend line to chase that CME gap liquidity, that is all that's needed to create massive panic and tell all investors that this is a failure breakout. I got a really mixed bag here because we have the incentive to go for the CME gap below it. We have the weekly momentum to the downside and approaching resistance. More of that in just a second. And we got the daily and the Trump pump now pushing strong, threatening to take higher levels and to take the higher liquidity. So that's why I think today's price action, today's close is definitely going to give us stronger clues on whether this is it or is an actual fake out. On the daily, very interesting breakout that we are seeing right now, and let's correct the line here. On Sunday, we closed at an RSI of 50.5, and since midnight the RSI has managed to cross above it and now is sitting at 55.5. So again, this is a live candle, can easily close above it, or it can retrace and close slightly below resistance, which is going to be bearish. Now, if we ended up with this candle reverting and pointing back down, let's say pointing to 43, reverting all the progress of this breakout, that is going to make very viable the possibility that we're going to once again go back to 31 in the RSI. If we close above it, our chances of continuation to the upside to very high levels of RSI is going to increase also significantly. So let's go back and let's see where is that 31 located right now. Let's change that from our current resistance, which we seem to have broken today, and let's put the 31. So as I told you over the weekend, if we see this pump from this high now going to an RSI of 31, guess where it takes you? Lower from when we went when the price was at 57. That is an effect of the price going higher. To take you to 31, it takes you straight to the liquidity of the 50s. We can very confidently say that today close as a green candle around here is gonna put these levels very difficult to reach for the bears. If this is a rejection and we go slightly below this trend line, or even worse, if we lose again the 200 daily moving average, then get used to the idea of RSI 31 and lower 50Ks being at that easy reach of a dump. And I don't want to scare you, I just want to make sure that you understand that both scenarios are feasible right now. If you remember at 73.5K, the Big Whale Explorer was hinting us that too many whales are depositing. When too many whales deposit, they have the finger in the trigger and things start slowly draining down. Same happened at 72 that the price was going higher, but they were depositing. Their intention was to sell, and that's what they did. And we have a 25% drawdown after that. Recently, at these lows, they deposit as much as they did around here. So do not look away from the computer. Do not skip this video. Don't do the silly thing. You are now informed. You know that they deposit. So the question now is, are they getting bullish and possibly reverting those deposits, withdrawing it back again into the wallet, getting confident that there is a move to the upside? Or are they going to use this card here and dump once again on us, taking us back to those 50s? Personally, I profit in any direction. I already have Bitcoin. I could have a lot more if we went to the 50s. So if they sell, I buy more at 50. If they don't sell, I keep holding my bag as I have it right now to the higher levels to take larger profits. An update on the bull market support band. We talked yesterday that the typical effect that you get in 2019 and in the previous bull markets at this point in time during this megaphone pattern, that is the last shakeout before the next leg up of the bull market, is that the price loses the bull market support band and comes into it, potentially even getting above it for further continuation into the megaphone pattern. But we say that we don't know if that's going to play out this time. So the next level is located at 65.3. That's the next level of resistance. Let's see if we conquer that, and very careful at around this area, because what we do need is to break this top trend line. And I'm going to show you this during COVID times because it's very, very easy to follow. You can see that we are below it, back above it, below it, above it, below it, and only when we break above the trend line, we are out of the woods for sure. So if your risk appetite is very conservative, that is the place to look at. If you're very aggressive, you can take the trades from the bottom of the megaphone pattern. You can see in previous markets, the idea is the same. You have this megaphone pattern in 2013 and you have this one in 2016. Same timing, just around the halving event before the next leg up of the bull market. And final one, by the way, I'm plotting again this trend line that we used to have 2 months ago in my charts when we were around here. I decided to remove it, but now I'm noticing that it is becoming relevant once again. That's the precise level where we are seeing some rejection, starting to build one bearish divergence from CCI. We closed yesterday the price, so we have the bullish cross from the MACD, so that's great, and we are above the 200 moving average. On Sunday, we closed the weekly candle with a buy signal from Cerberus. This is quite a big deal, and the alts retraced from 46 to 35 in the altcoin season index. This is not something bad. This is purely caused by Bitcoin pushing higher, and I will assume that the dominance is also going higher with it. This means that Bitcoin is now taking back the lead, the spotlight, and some altcoins are staying slightly behind to give some room for Bitcoin to push higher. That's the typical behavior. And as I was expecting, the Bitcoin dominance is pushing slightly higher, not making any high, so we still have a chance to see that altcoin season coming here eventually. It will be interesting to see a push high with an extreme move like this, but typically at this time in the market, when you see Bitcoin doing something like that, is usually after Bitcoin crashes. Of course, it can also happen when Bitcoin pumps. And I'm gonna go very quickly through the alts. So you can see that all the breakouts of all my selection, it's still in place. You have BNB with breakout. TIA was a call for a short that already gave almost 20% in the short. BCH is in breakout area. Phantom, LTC, MNT, Link, STX, EOS, Core, Shift, all the coins are in breakout area, bouncing from support, or after a liquidity grab from the lows are pushing against next levels of resistance, which is quite bullish. I think if Bitcoin was to make that move to the low 50s, that is going to be a little bit painful for these altcoins. Probably we are going to enter into some drawdown if you guys are holding on spot. If that happens, we're gonna get a second opportunity to add more. Bitcoin continues going higher and starts chilling right at an all-time high. Why not? Then these coins are gonna give massive returns in a proper altcoin season. And since today is Monday, new week, we have to look at the weekly RSI on Bitcoin. And you can see that we have closed the week at 52 and started the week pushing higher. And where are we going? We are going straight to this red circle in here. There's a lot of confluence at this point. Number one, if we made it to this level here, we have this trend line pointing at it. We have the downward sloping trend line at the same level. So if we were to hit that level as a resistance, that battle is going to decide whether we re-enter into this area, which is extremely bullish for Bitcoin. This area here signifies new all-time highs, and not just that, but almost like a V recovery, because in that case, that means that this whole thing was just a bear trap. I think personally, and don't shoot the messenger, as a technician, what I'm expecting to see here with higher likelihood, not guaranteed, is that we hit the 59 on the RSI and we see a rejection. Whether here we put a higher low or a lower low, that is getting too much ahead of ourselves, but I think this level is gonna be critical for resistance, for the definition of whether we get a new all-time high very soon, or we are still in the summer bearishness of the market, waiting for a bit more consolidation and for a slower recovery. This level is 59, and I have it here in my chart. That is today located at 66.2. That is the line in the sand from the weekly perspective to turn this whole sell into just a fake out that everybody will forget about in the future. So the question is, what is the stochastic bullish cross that we just confirmed on the weekend roll around all of this? It's got two rolls. It's telling that the price has recovered some momentum and is due to go to the upside, which is what we are already seeing in the RSI. We are seeing one candle to the upside and one candle in progress today on Monday, also to the upside. But this doesn't necessarily guarantee that we break above that 59 resistance on the weekly RSI. Why? Because this one was also a bullish cross and it gave us very little move to the upside, defined this level as a resistance. So potentially this new bullish cross could give us a very similar effect. If you look at the previous one did this, so why this one wouldn't do the same once more? And I'm not telling you that that's necessarily the outcome. I'm just telling you that is also possible to see the same magnitudes once again. And we currently have the short-term holder realized price at around 64K. We're getting very close to it. The fear and greed index has made a phenomenal recovery to about 50. Now it's sitting at 52. And whether all this support at 50 is going to now become resistance, or if we are going to hold that 52 and continue going higher, only time can tell. But we exit straight from extreme fear 25, an impressive move of 27 points. Long-term liquidity is located at the top end at 74K and at the bottom at 51. No doubt about it. This is the 4-hour on trading different. Let's change it to scalping. We are now at 62.5 and we can see that 64 is pretty attractive here for the price to just leave hanging. Let's zoom out a little bit more and compare to what we have at the lower end. We have one level at 63.8 followed by 64.5 and 65. So in terms of liquidation, guys, these are all shorts. You can see how the line got thicker right now because many shorts have entered from 63. Same with 65, they enter right around here at 63K. So that's the incentive right now for the price to potentially continue to go higher. You can see how the fair value gaps that we were talking about over the weekend are all gone, and now they became liquidity to the downside. On the live order book, we got plenty of levels up until 65 trying to short the price. There are some significant levels here at 63.5 with 930. So far, the VWAP is providing support. On high block capital, you can clearly see what is the liquidity that we left pending there at the low 50s. Same for the yearly here. That's definitely the most significant, and high block capital is telling us that the very juicy liquidity is located above 70. So just by looking at the yearly, this looks like maybe that bounce could come back to grab that before deciding to go for this, just because this is very far from the price at the moment. You can see that here at 52k we have left that liquidity, and currently we are going for that liquidity at the top end, located at 67k I think. On the monthly, this candle, if it was to turn into the green, that will look really bullish to me, particularly because that will mean that we absorb all this liquidity from there and manage to remain above 61.5. Closing July there is probably one of the most bullish things that we can expect. The active address sentiment indicator is pushing higher, potentially for a cross above the green line. That is one of the most conservative entries in the market. The cross is still not happening, but we're getting very close. Guys, have a look at the description. Bybit is not only offering up to 30,000 in rewards if you use my link in the description, but also if you join my Discord server and join my community, you can connect, you can provide your Bybit number in here, and then claim 70% of any of the memberships that I have currently available on my website. This is gonna give you access to hundreds of different indicators that are gonna help you navigate the market. Many of them, we use them during the videos, and also strong tools for automating trading bots, backtesting, that I'm sure that you're going to enjoy. We also offer signals, orchestration signals, per selection that currently supports Ganium, FreeComas, AltReady, Weak Hunter. If you have any questions, you can drop a comment down below, or you can just join my community on my Discord server, where you can find me pretty much all the time. Guys, thanks so much for watching. I'll see you in the next one. Take care. Bye bye.